Welcome to TheoTrade. This is Don Kaufman. Here we are. It's January 29th, 2018. It's Monday, and we're coming into the close right now. Got about 20 minutes till the cash close. We're seeing a bit of volatility in today's marketplace. However, need I remind everybody that the S&P futures, they closed up 33.5 points on Friday. I mean, you have to look at this, and I'm saying we're seeing some volatility, but the S&P futures, they're only down 19 right now. We're just giving back just a little bit of what we gained just from Friday alone last week. Nevertheless, there's some interesting points to be made here. And before I go on and start, evaluating a little bit about the markets, I do want to show you one thing. So we're seeing a little bit about volatility today. But hey, listen, the volumes, they're just not there. I mean, right now we're about to crest through the session lows, right? So volume in the S&Ps are going to pick up, no doubt about it. But when I'm talking about volume, all right, the markets aren't exactly rocking today. I mean, listen, we're doing about 1.1 million S&P contracts. With 20 minutes to go to the day, we're going to be lucky here to do about, 1.4 million, which is not exactly crazy talk. As I said, here's the session lows. The volume's starting to pick up out there. The ticks are negative. It's getting what? Well, mildly ugly. Is there even such a term? Again, the S&Ps, need I remind you, up 33.5 on Friday. But here's really what I want to focus on before we start getting into some individual stocks. Okay, there's a lot going on this week. Volatility is getting bid up. Whether you want to look at the volatility futures, which are peaking right now, all right, so the volatility futures, I'm going to zoom out for just a second as well, and I want to show you, this is a bit of a standout, people, all right? Markets clearly see some risk out there. Again, the S&Ps are not exactly rocking to the downside, but this is, and if you back up and just take a look at the volatility futures, in fact, I'm just going to go to the full volatility futures, non-contract adjusted. I want to show you this is big league, again, kind of movement to the upside in terms of volatility. Now, the VIX would agree. The VIX is up over 22% today, neither here nor there. Scrolling to the bottom of the screen, what is getting and starting to really entice me to believe that there could be some risk, well, the VVIX is butting up right against this 110 level. And the 110 level, it's, if it's going to get there, it doesn't look like it's going to get there for a fleeting moment. And when I say a fleeting moment, if you look back over here, that was, you took one breath and the VVIX dropped down. Same thing here and here. Okay, we could be entering into some real risk. We're getting bid in the VVIX into the close. And again, if it's above 110, for those of you that are not aware of the VVIX, above 110, I always say it's kind of like duck and put yourself under the desk. It's incoming. Anyway, so a little bit of volatility starting to emerge. And this is precisely what we've been talking about with regard to the SPX. So, on the weekend video, I was talking about a marketplace that has been incredible in terms of efficiency, turning to this incredible inefficiency. And that has everything to do with the expected move. That we cracked outside of the expected move in an extraordinary way in 3 of the last 4 weeks. And again, this is precisely what I showed in the weekend video. There's 1, there's 2. Here we stayed inside. There's 3. And now we're in, the next week over here where, and you want to look for this, check this out. The expected move today, being Monday, has expanded out for the week. That is a highly unusual stance. And I want to explain precisely what this means. If you take a look at the 4-day options, these are the options that expire this Friday. The expected move now is right around $35, $36. So we're seeing an expansion of movement, an expansion in comparison to what? Well, on the weekend video, we always take a look at the expected move, right, with exactly 1 week to go. And you can see that, again, the week had about a $32 expected move. Well, again, now we've actually expanded that out. So when everybody thinks of options, like options decay, okay, as you move forward in time, the exact opposite has been true today. Options haven't been decaying. Options have been actually adding value. How do they do that? The volatility has gone up. So, you're looking at the VIX and you're like, oh yeah, the VIX is up 22%. Oh yeah. Okay, time out for a second though. The VIX is 30 days out. That's not the best place to take the temperature, if you will, of the marketplace 30 days out. You want to take the temperature of the marketplace, what's really going on in the S&Ps, take a look at the short duration volatility. It's almost 14%. Now, where did the volatility end? Again, where did that volatility end? Ultimately on Friday, and it was just about 10%. So in effect, if you look, again, this was Friday's close. Again, it was ultimately what I'm showing you on a Sunday, but it's from Friday's close. It's basically 10%. We move to the live screen over here. You got volatility up, 35, 40%. And that's, again, this is a fairly drastic move in volatility. Now, enough said on that front. At this point in time, just because we're seeing a little glimpse of volatility, I am not so inclined as to want to start to turn around and sell premium immediately in the S&Ps. Okay? If I take a look specifically at the SPX, the volatility percentile is the 71st percentile. And again, for those of you that are unaware of what that really amounts to, well, we're going to give you a little crash course in implied volatility because I'm going to tell you there's some interesting aspects here in terms of implied volatility. We're going to cruise over here to style, and under style, we're going to go down to load style, and I've actually got just IV on a chart for a year. And I just want to show you over the last year, forget about the chart so much, over the last year, you can see pretty clearly volatility is starting to pick up. And what that 70th percentile or 70th ranking kind of means, I mean, if you boxed in volatility for the year, there, box it in, down to the below, that's the 0%. Up here would be 100%. Right now, okay, we're at about 70%. So we're a little, past middle of the road. Now remember this example in just a moment, because we're going to get to a couple of products over here that are screaming, get ready for some risk. And I'm going to show you that here momentarily. Before I go any further today, so we're showing, again, expansion of volatility, and it's been a really long time since we've seen the expected move on any given week. As the day is moving forward, the expected move is growing, not contracting. Very unusual. Now I'm going to show you another very unusual aspect. So I've been watching the sectors themselves. And you can see the energy sector is getting whacked back a little bit today. But for the most part, these are the 11 sectors of the S&P. Yes, real estate now has its own sector, so that has 11 sectors. But you can see across the board what's down and what's not. The interesting aspect to me, yes, IT is down today. And IT is down because Apple's getting hit and Facebook are getting hit, right? I mean, Google's faring well. Amazon has been stellar. But the point that I want to make over here is what has led the marketplace to the upside is not per se what's getting hit the hardest. And what I really want to focus on over here is the strongest really of the key sectors. Okay. When I come to the key sectors, I want you to look at the XLF year to date, the financials. And on a year-to-date basis, again, we're only a couple of weeks into the year, but we're up 7.6%. And you got to realize that the XLF today, it's not even down 0.5%. So do you recognize the risks that are ahead of you when you have the marketplace down 0.7 or 0.8% where it is right now? So the market's down pretty good right now, and yet the sector that got us up there in the first place, it hasn't even scraped its knee. And that's a little bit disconcerting to me on that front. Is there's a couple underlyings like Goldman Sachs today. This thing happens to be bid up on the trading day. Again, it's highly unusual to see the S&Ps down 20, but what is arguably, and I will argue this, that the financials, okay, in terms of a sector, the most powerful sector, they're barely down today. And that's, again, it's kind of a disconcerting area, probably because the bonds happen to be down a little bit. Now, I'm going to switch gears completely on you, but again, mark my words, you keep an eye on those financials as this week progresses. Now, as I was speaking a moment ago of volatility, and we're going to go back to that setting there in terms of volatility. So we're going to look at the IV for 1 year. And all we're doing right now, we're just looking at a chart on implied volatility. Okay, as I said, it's going to be a fairly big week. And a big week for a lot of earnings, a big week for volatility. What's coming out this week? The monsters of tech. You got Amazon, you got Google, you got Facebook, you got Apple, you got Microsoft, you've got Boeing coming out. Oh my! Okay? But when it comes to the monsters of tech, and that's by the way, the monsters of tech, that's what I actually call Microsoft, Apple, Facebook, Google, and Amazon. The conglomerate, I call it the monsters of tech. Take a look at this, okay? In these monsters of tech, the volatility, and I think very few traders are really catching this, the volatility. And I got to close up the left side bar just to do this a little bit of justice. Now, this is the 30-day volatility, which is definitely out in the future, okay? And the here and now, first of all, Amazon, you're looking at a $100 expected move on a $1,400 product, okay? However, the IV percentile is the 100th percentile, which means, okay, volatility has not been higher any time in the last year. The interesting thing is, like with Amazon, this is a little scary because the stock has been exploding to the upside. Yeah, so is volatility. And if you look back in time, just draw a quick line across the screen. The last time volatility really got in this range was all the way back in early 2016. At that time, the S&Ps were at 1,800 and falling, okay, and it did fall over 300 S&P points. So the volatility, it's engaging right now inside of Amazon. If it was Amazon alone, I'd leave it alone. But then we looked at Google, okay? Google, it's the exact same volatility. It is spiking with the underlying heading up. But I was like, all right, so you got Google, you got Amazon over here. And you have to realize Google and Amazon are going to release on the exact same day. Then we have Facebook. Facebook, all right, which is already getting hammered a little bit today by the tune of about 2%. It too has not nearly as elevated, I think, as Google and Amazon. Okay, but it too has an elevated volatility. Granted, Facebook hasn't necessarily been exploding, if you will, to the upside. And it just continues. Apple, this is the highest volatility that we've seen, okay, until you go all the way back here into the 2016 time frame, okay? Microsoft, and I just wanted, again, all the monsters of tech are reporting. This is Microsoft, people. It's like the most boring underlying out there. It doesn't get more boring than that. At this point in time, I will go ahead and say I will be selling some premium around these earnings announcements. Much of that I will discuss in detail kind of on Wednesday, okay, and Wednesday night's video. But tune in to the TheoTrade chat room because I will discuss the sale of premium. I mean, it's been a long time since we've seen volatility in some of these monsters of tech this high. Now, on the flip side, I think I need to also caution, okay, this is going to move the Nasdaq extensively in the days to come. The Nasdaq sees it, okay? And when I say the Nasdaq sees it, hey, listen, the Nasdaq, the volatility is up to 22% with 4 days remaining on a $3.50 expected move. So there's no question the Nasdaq itself is also seeing the 100th percentile. It's the highest volatility, okay, in the Nasdaq that we've seen at any point in the last year. Again, you got to go way back over here to some major events, including the election, Brexit, to see volatility that has been this high. Again, selling of premium, not so much in the SPX, but the Nasdaq right now, it's ready to rumble. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.